Most people believe banks are safe because they are familiar. Their logos are everywhere. Their buildings are tall. Their apps are polished. Their employees speak calmly. Their systems feel official. And because they are part of everyday life, most people never imagine that hidden inside this comfort is a quiet trick, not illegal, not secret, but carefully unspoken. This trick does not steal money overnight. It doesn't empty accounts or freeze withdrawals. It works slowly, silently, over years. It erodes value so gently that most people never notice it happening. And by the time they do, decades have passed. Banks do not need to lie to take advantage. They only need to stay quiet about how the system truly works. Because when people do not fully understand money, they surrender their financial future without resistance. The average person believes saving money in a bank is responsible, wise, safe. They open an account, deposit their earnings, and feel proud that they are preparing for the future. But they are never told the full story of what happens next. Money in a savings account does not grow in a meaningful way. The interest is tiny. So tiny that it feels symbolic rather than helpful. A gesture, not a strategy. And while the account balance appears stable, something invisible is happening around it. Inflation quietly eats purchasing power every year. The cost of food rises. The cost of housing rises. The cost of healthcare rises. And while the number in the bank remains nearly the same, the real-world value of that number shrinks. This is the first trick. The illusion that keeping money still is the same as keeping money safe. In reality, motionless money slowly dies. Banks rarely explain inflation in emotional terms. They do not say, if you leave your savings here for 20 years, your money will quietly lose half its real value. They show interest rates instead. Small percentages that feel harmless. Numbers that seem reasonable. Numbers that hide the truth. People trust banks because banks look like guardians. But banks are not guardians of your wealth. They are businesses that use your money to make more money for themselves. Your deposits become their tools. Their loans. Their investments. Their profit engines. When you place money in a bank, you are lending it to the bank. And the bank pays you a small interest as rent. But the bank then lends that same money to others at much higher rates. The difference becomes their profit. This is not illegal. This is not hidden. But the emotional framing is never explained. People are told they are saving. In reality, they are funding the system that profits from them. The second trick is that banks rarely teach financial growth. They teach financial storage. They offer accounts, cards, apps, statements. But they do not teach how to beat inflation. They do not teach long-term wealth strategy. They do not teach investment psychology. Because a customer who understands money deeply needs the bank less. Ignorance is profitable. Simplicity is profitable. A customer who only knows how to deposit and withdraw is predictable. A customer who understands financial systems is harder to control. Another layer of the trick lives in debt. Banks normalize debt as a lifestyle. Mortgages. Credit cards. Personal loans. Car loans. Everything structured to feel manageable in monthly pieces. And when people focus only on monthly payments, they stop seeing the true cost. A house that costs twice its listed price over 30 years. A credit card purchase that triples in cost when minimum payments stretch over years. A car loan that outlives the car itself. The numbers are not hidden. But the emotional meaning of those numbers is never highlighted. Banks do not need to deceive. They simply present information in a way that encourages comfort over clarity. Another quiet trick is the feeling of security. Bank apps show clean interfaces. Balances are displayed clearly. Graphs are smooth. Everything feels under control. This visual calm creates emotional calm. And emotional calm prevents deeper questioning. People rarely ask, is my money actually growing? They ask, is my balance still there? And as long as the number remains, they feel safe. But wealth is not measured by stability alone. It is measured by growth, resilience, and purchasing power. And on those measures, simple bank storage quietly fails. Then there is the trick of trust by authority. Banks look official. They use serious language. They have regulations, licenses, government backing, and while this protects deposits from disappearance, it also creates a false sense that the system is designed for your benefit. In truth, the system is designed for systemic stability and bank profitability first. The most powerful trick is that banks present themselves as the default, the only sensible option, the adult choice. And when something feels default, people stop exploring alternatives. People grow up hearing, "Put your money in the bank," not learn how money works, not understand inflation, not build assets, just put your money in the bank. And so generations repeat the same behavior, believing they are being responsible while slowly surrendering potential. There is also the trick of complexity. When banks do offer investment products, they often appear complicated. Long documents, fine print, risk disclosures, fees layered inside fees. The complexity discourages curiosity. People sign what they do not fully understand because they trust the institution. Complexity is not always deception, but it is often a shield. When something feels too complicated, most people stop asking questions. Then there are fees. Small fees, service fees, management fees, maintenance fees, transfer fees, percentage fees. Each one tiny, almost invisible. But over years, these fees quietly remove enormous amounts of money from customers who never notice. Banks do not announce, "We will take thousands from you over your lifetime in tiny pieces." They show monthly statements, small deductions, numbers that feel too small to worry about. The trick is scale. Tiny leaks become floods over time. Another silent trick is timing. Banks operate on long horizons. They do not need to win today. They win by remaining consistent while customers remain passive. A customer who does nothing is the most profitable type. No complaints, no changes, no questions. And so passivity becomes the real product. Not money, not services. Passivity. The most heartbreaking part is that most people never realize any of this. They retire believing they did everything right. They saved. They avoided risk. They trusted institutions. And then they discover that their savings cannot support the life they imagined. They feel confused, betrayed. But there is no villain to point at, no dramatic theft, no crime, only a system that quietly did exactly what it was designed to do. This is why it is called a trick. Not a scam. Not a fraud. A trick of framing. A trick of silence. A trick of emotional comfort. Banks do not warn you about this because there is no incentive to do so. A customer who understands how to outgrow a bank will eventually leave. A customer who remains unaware stays forever. None of this means banks are evil. They are institutions. Machines built for specific purposes. But mistaking them for personal wealth guardians is where people fall into the trap. Real wealth requires understanding movement, strategy, patience, learning, risk management, asset building, none of which happens automatically by storing money. The world of finance is not designed to harm you, but it is designed to reward those who understand it and quietly extract from those who do not. This is the investment trick banks don't warn you about. Not a secret conspiracy. Just a system that benefits from your silence. Once you see it, you cannot unsee it. And from that moment, your relationship with money changes. You stop asking, "Where should I store my money?" and start asking, "How should I grow my value?" And that question is the beginning of real financial freedom. This has been Scam Decoder. Stay curious, stay patient, stay awake. Because money that rests too long in comfort slowly forgets how to live.